So what's the deal with 2026? Is it going to be a year of booming growth? Or is it finally the year the recession everyone's been talking about actually hits? Depending on what you read, you could get a completely different answer. Some data says we're accelerating, other data says we're about to hit a wall. So what's really going on? Well, let's follow the numbers and figure it out together. Okay, let's just get right to the big question. Are we heading for a recession in 2026? The reason this year is so darn tricky to predict is because you have these massive, powerful economic forces pulling in completely opposite directions. And honestly, it's not at all clear which one is going to win out. So what are the big banks saying? Well, if you look at the consensus forecast from major players like JP Morgan and RSM, they're putting the probability of a recession in the next 12 months at about 30 to 35%. Now, that means the most likely outcome is yes, we avoid a formal recession, but a 1 in 3 chance? That's a risk you have to take pretty seriously. So let's unpack that. All right, first, let's look at the optimistic side of things. To understand why most economists think we'll probably skirt a downturn, you have to look at the powerful forces, the tailwinds, that are actually pushing the economy forward. These could make 2026 a year of really solid growth. So what's fueling all this optimism? It's really this unique combination of things. You've got a huge fiscal stimulus package pumping money directly into the economy. You've got this massive, almost once-in-a-generation investment cycle happening in artificial intelligence. And there's a general hope that the worst of the recent trade shocks are finally behind us. Now, the single biggest factor here is a piece of legislation from back in 2025. You might have heard of it. It's called the One Big Beautiful Bill Act, or OBBBA for short. This law was a massive overhaul of our tax and spending system, and its effects are pretty much the main thing driving the outlook for 2026. So, let's look at what's actually in this bill. The core of the stimulus is right here. First, it made those 2017 tax cuts permanent, which was a big deal. It prevented a huge tax hike on everybody. But the really new parts are these deductions for overtime and for tips. The whole idea is to give people a direct financial reason to work more in sectors that have been struggling to find people, like healthcare and restaurants. The other huge tailwind? It's all about AI. We are in the middle of a massive investment supercycle right now. Companies are spending billions and billions of dollars building out the entire infrastructure for artificial intelligence. Everything from data centers to a more robust energy grid. All of that spending is like rocket fuel for economic growth, all on its own. But, all that stimulus and investment, that's really only half the story. At the exact same time, there are some pretty powerful headwinds pushing in the opposite direction, threatening to tip the scales into a downturn. This is the other side of the 2026 economy. The key phrase you're going to hear economists throwing around is stagflation light. So what on earth does that mean? Well, it's this really nasty combination where inflation just stays stubbornly high, above the Fed's 2% target, while at the same time, wage growth is slowing down. The result? A painful, painful squeeze on your purchasing power. And this really lays out the problem perfectly. Think of it like a scale. On one side, you've got your income. It's getting a little boost from some tax deductions, sure, but it's being held back by slowing wage growth. And on the other side, weighing it all down, you have relentless inflation, high interest rates, and the rising cost of pretty much everything imported because of tariffs. For a lot of families, the scales are just tipping the wrong way. Costs are simply outweighing income. This quote from the economists at RSM, it just captures this tension perfectly. They're saying that, yeah, the negative effects of last year's tariffs might fade a bit, which is a good thing. But the affordability crisis is a serious, ongoing problem. In other words, one piece of good news doesn't just magically cancel out a major source of financial pain for millions of people. The other major warning light that's flashing is the labor market. It is undeniably cooling down. Hiring has slowed way down, so much so that a key technical recession indicator, something called the SAM rule, got dangerously close to its trigger point late last year. Any more weakness in the job market could be the final nudge that pushes us into a formal recession. So on top of all those headwinds and tailwinds we know about, we've also got these major wildcards coming out of Washington. These are the great unknowns, huge policy decisions that could dramatically shift the entire economic landscape in 2026, and they make any kind of forecast incredibly difficult. Okay, the biggest wild card of them all has to be this case in front of the Supreme Court. It's questioning whether the sweeping tariffs imposed back in 2025 were even legal. Their decision, which we're expecting pretty early in the year, could literally change the entire economic outlook overnight. So you've got two completely different paths here. If the court strikes down the tariffs, importers could get billions of dollars in refunds. That would create this huge surge of cash for businesses and a disinflationary shock that could actually lower prices for you. But if the court upholds them, it pretty much cements this high tariff world as the new normal, and that ensures continued pressure on consumer prices. The stakes here really couldn't be higher. And then there's the Federal Reserve. They're caught in a classic dilemma. I mean, they've started cutting interest rates to help out the cooling labor market, but inflation is still stubbornly above their target. The committee is reportedly deeply divided on what to do next. And to add to all that uncertainty, a new Fed chair is going to be appointed this year. It's just a period of maximum unpredictability for monetary policy. So when you put all of these pieces together, the stimulus, the AI boom, the affordability crisis, all the policy wildcards, you start to realize why all the signals are so mixed. It's because we don't really have one single economy right now. What we have is a tale of two deeply divergent economies existing at the very same time. The term for this is a K-shaped economy. Just picture the letter K. The top leg of the K is shooting up. That represents high-income households and all those AI-related sectors that are absolutely thriving. But the bottom leg of the K is sloping down. That represents lower-income households and more traditional sectors of the economy that are falling further and further behind.
So what's causing this great divergence? Well, the data points directly to the two main policies we've been talking about this whole time, the OBBB stimulus bill and the new tariff regime. Their combined effect is creating a massive gap between the economic winners and the losers.
Let's actually look at the numbers because they are pretty shocking. According to an analysis from the Yale Budget Lab, for the top 10% of households, the combined effect of these policies is an average increase in their annual after-tax income of nearly $8,000. But, and this is a huge but, for the bottom 10% of households, it is the exact opposite story. They are facing an average reduction in their annual after-tax income of about $2,700. Look at those two numbers. This isn't a small gap. It's a chasm. This is the K-shaped economy in a nutshell. And you can see this divergence out in the real world too. I mean, just look at the housing market. While people who already own homes with lots of equity are still active, first-time homebuyers, they've fallen to just 21% of the market. That's an all-time low. The dream of homeownership is becoming a really clear dividing line between the haves and the have-nots.
So, will there be a recession in 2026? The most likely answer is no, probably not for the economy as a whole. The top-line numbers, the ones you see on the news, will probably show some modest growth. But that leads us to the much more important question that all of this data leaves us with. The numbers point to a growing economy, but whose economy is it?